I was going to ask Rob Sechan next. Maybe I'm wondering if it's before 2022, because as we said, as rates are not running away from us, whether that growth trade comes back in vogue, and that the Kalanovic call is partly fueled by the cyclicals, which he says, and maybe it's a more weight towards that side of the ledger, but that these high growth stocks, which have corrected and self-corrected over the last few months, now get a second wind because they are more reasonably priced now than they were, and against the backdrop of rates that aren't running away.
Yeah, I think there's a bunch of things that kind of favor these companies, and I'm not talking about the stay-at-home economy stocks. I'm talking about some of these high-quality blue chip tech stocks like a Microsoft, a Google. And when you look at mutual fund allocations, their exposure to tech is, based on a Z-score at an all-time low. We haven't seen this low of an allocation, which means deviation from the mean, since 2007. In addition, if interest rates, people continue to trust the Fed, interest rates stay low, there's a huge tailwind to tech, because we know the headwind that they faced as interest rates rose, and you brought those earnings back at a higher discount rate. The last thing that I would say is information technology, as it relates to the S&P, has the highest percentage of foreign exposure as it relates to revenue. And so when you look at that, and if you believe that other countries are behind us in reopening, and you believe that kind of this dollar weakness persists and revenue from abroad is more impactful to earnings at home, I think tech has a nice bid here. And that's why last time I was on the show, we just did a slight pivot. We still have all the cyclical reopening stuff. I think we have a dearth in the middle, but I do think tech can find its footing.